Hey traders, welcome back. I see so many traders these days are getting into scalping and because of good reasons. You have to take your quick entries and exits when you are scalping and you don't have to deal with a lot of emotions of holding on to your winners or holding on to your loser. When you are scalping, you take your entry. If the trade works out in your favor, you take your profits. If the trade does not work out in your favor, you exit the position and look for the next trade. You don't have a wide stop loss or a wide profit target in scalping. It's quick in and out, and that's what suits my personality as well. I personally am a scalper. I love scalping, but I see so many traders are doing it incorrectly, and I see so many traders with very low win percentage on scalping. Their win percentage is only 20 or 30% in some instances. In this video, I will be showing you guys how to scalp first of all, and second of all, I will show you guys the tips and tricks on how you can increase your win percentage on scalping to take it to 70 or 80%, or maybe even sometimes 100%. First of all, let's have a chat what is scalping. Even if you search online, it will just tell you that it's short-term trading. But what is short-term? Because different traders have different definition of scalping. Some traders might hold a trade for 1 or 2 hours and call it a scalp. Other traders might hold a trade for 5 minutes and call it a scalp. For me, what I go by is that if I am holding a trade anywhere between 1 minute to 15 minutes, I will call it a scalp trade. But if I'm holding a trade for more than 30 minutes, I would actually call it a day trade. At the end of the day, the definition doesn't matter because scalping is a part of day trading. Both are short-term trading. What is day trading? That means you're not holding your trade overnight. You are taking your position, you're exiting that position within the same day, and scalping is also a part of day trading. Once you know what is scalping, the next question is how to scalp. Ideally for scalping, I look for patterns, trend continuation patterns like bull flags, bull pennants, bear pennants, and that's what you should do. At the end of the day, the name of the patterns don't matter. I'm going to explain bull flag and bull pennant right here. Both of these strategies are kind of similar. You don't have to remember the name of these patterns. What you need to know is that both these patterns have a bullish move towards the upside followed by a period of consolidation. That's all you need to know. In the bull flag strategy, that period of consolidation makes a flag. In a bull pennant strategy, that period of consolidation makes a triangle. That's the only difference. And it's just the opposite for the bear flag and bear pennants. You have a bearish move towards the downside followed by a period of consolidation. That consolidation might make a flag, bear flag, or it might make a triangle, bear pennant. Let's take an example of mRNA from 1st of October. After 30th of September, mRNA was around $380, $385 level. On 1st of October, mRNA gapped down big time. So even if you were scared that it is a big gap down and you wait for a perfect move towards the downside, it had a bearish move towards the downside followed by a flag pattern. On this period of consolidation, this $350 level, 350.50, which is a good psychological level as well, was acting as resistance. So now what you can do is you can either enter at this resistance, $350 level with a stop loss at 351, or you can wait for the break of this flag. If I enter at the break of the flag, my stop loss will be the break of this candle towards the upside or the break of this flag pattern towards the upside. So I don't want the buyers to step up again. I want the volume to kick in and I want the sellers to take control. Even if you take your profits, maybe 50% or 70% of your position out at the break of the low of the day, that was right here. This trade was easily 3-1 or 4-1 risk to reward. This was a basic example of scalping. If you guys want to see more examples of my scalping trades, my entries and exits, you can go through my YouTube channel. I have a lot of day recaps and most of my trades are scalps, so you guys can get a better idea of where I enter and where I exit my positions. The second part of this video is the most important part. How do you increase your win percentage with scalping? And before we jump on to that part of this video, give this video a thumbs up. The very first tip I would like to give you to increase your win percentage with scalping is to go with the trend. There's a common saying in the trading world that a trend is your friend, and there's a very good reason behind it, because especially when you are a beginner trader or you have been trading for less than a year, going with the trend will increase your win percentage. Unless you're a reversal trader who has mastered the skill of reversal trading, which takes a long time, sticking to the trend is your best bet. Just for the sake of simplicity, let's take an example of mRNA again, but this is a different day. Earlier we looked at 1st of October, now it's 8th of October. We had a clean push towards the downside again. With the flag pattern, you take it for the break of the flag towards the downside. So these are called trend continuation patterns. These patterns called bear flag, bull flag, bear pennant, bull pennants are trend continuation patterns. What this means is that you either have a bullish move towards the upside, followed by a period of consolidation for the next push up, or you have a bearish move towards the downside followed by a flag pattern, and then you have another bearish move towards the downside. I see a lot of beginner traders trying to trade reversals, trying to catch the bottom of the market or the top of the market, and their win percentage is only 5 or 10%, and that is basically the reason, because you're trying to go against the trend. As a beginner trader, or even if you're an experienced trader with trading the trends, your best bet to increase your win percentage will be to go with the trend. The second tip I would like to give you, and this is one of the most important tips I see so many traders messing up on, particularly this tip, is to look at the higher time frames. Because if you're looking at the flag on the 5-minute chart when a stock has already moved 20-25% on the hourly or the 1-day chart, most likely that flag is not going to work out in your favor. I have a very good example of Affirm recently. So let's take a look at the chart of Affirm. This was Wednesday last week. It had a low of this day around $110 level. It had a high of this day around $138 level. So it had a move of around 27% in 1 day itself. This was on Wednesday last week. Now let's go to the 5-minute chart and look at the chart of Thursday last week. A lot of traders were trying to catch the flag right here. For example, it had a bullish move towards the upside followed by a flag pattern. You took it for the break of the flag, you got faked out, it pushed towards the downside. So you have to always look at the higher time frames. If the stock is very extended on the higher time frames, or maybe sometimes a stock is showing signs of reversals on higher time frames. Yes, your entries and exits when you are scalping are based on the 1 minute and the 5 minutes or maybe 15 minutes, but you always have to look at the bigger picture on the higher time frames. What I mean by higher time frames is to look at the daily chart. When a stock is very extended, it had a $35 move the day before, so it requires a bit of consolidation. If you look at the 1 hour chart, you guys can see it made a flag pattern on the 1 hour chart. It had a bullish move towards the upside followed by a flag pattern on the 1 hour chart, and then on Friday it had a push towards the upside. If a stock is very extended on higher time frames like the 1 hour chart, the daily chart or the weekly chart, even though the stock will be making good flag patterns on the 5 minutes like Affirm was making on Thursday last week, you have to keep in mind that the stock is very extended on higher time frames and try to stay away from trading flag patterns on a stock that is very extended. The third most important tip I would like to give you guys is to focus on ATR. ATR means average true range. That means how much a stock moves between the low of the day and high of the day on an average on a daily basis. I recently made a video on the day trading indicators I use every single day. I'm gonna link that video at the end of this video and in the description box below. But basically, if you're using TradingView, there's an indicator right here. You search for ATR, that is the average true range. I have it applied already here. I'm gonna show that indicator. Now you hover over the charts on the candles and you will see the numbers changing right around here, this red number. You guys can see recently ATR of Tesla is around $20 to $22 for the day. What this means is that Tesla, on an average, on a daily basis, it's moving around $20 for the day. It's true, when Tesla is breaking a critical level, when it gets a lot of volume, it can move past its ATR. But for you to increase your win percentage, your best bet would be to take it when Tesla hasn't moved $20 or $25 for the day. This is an example of Tesla from 27th of September. The low of this day was around 769 and the high of this day was 799. So in theory, Tesla moved $30 for the day. That is $10 above the ATR. But you can look at the chart. It had a clean push towards the upside, but once it moved $20 for the day from 769 to around 789, it had a crazy push towards the upside. Look at this price action. This price action is not good for scalping. It had a clean break right here at the break of the flag, but that flag got rejected. For me, for scalping, what you need is that you need a clean push towards the upside, followed by a flag pattern, followed by a clean push towards the upside again. Tesla made a new high of the day around 799 right here, but it was dragging towards the upside. This is good for day trading. If you're entering right on the pullback, you're holding until your profit target to 799. But this video is specifically about scalping, how to increase your win percentage when you are scalping. And this is not the best way to scalp. When a stock has moved past its ATR, it can still move in your favor, but the moves will be very, very slow. low, and those moves are not suitable for scalping or to increase your win percentage with scalping. And if you guys ask me why this happens, this is because ATR is one of the most popular indicators used by a lot of pro traders, prop traders, a lot of traders around the globe. So what happens when a stock moves past its ATR? The traders who took it right at the bottom, right here, the pro traders, the big traders with the smart money players, those who have huge amount of money to invest in the stock market, they will seek profit taking right here because Tesla has moved past its ATR, that is the average true range. And the reversal traders around the globe, they will try shorting the stock. That means because they are thinking Tesla has moved past its ATR, it's not going any further up, and we are gonna try shorting it. That means people are seeking profit taking, people are trying to short it at the same time. That's why the momentum towards the upside is no longer there when a stock moves past its ATR. In this video, I gave you 3 tips on how to increase your win percentage. These tips can also be applied to day trading in general, but the first tip is to go with the trend. I see a lot of beginner traders trying to catch the bottom of the market or the top of the market, and their win percentage is low, and because of good reasons. The second thing is to look at the higher time frames. A lot of traders are trying to catch the flag on the 5-minute chart when a stock has already moved 20-30% on the 1-hour chart. So when a stock is extended, wait for the stock to give a consolidation on higher time frames before looking at the 1-minute or the 5-minute chart. And the third thing is to look at the ATR, average true range. If a stock has moved past its ATR, the momentum of the stock going towards the upside or towards the downside will keep on going down, and that is not good for scalping. That's it guys. Hopefully you liked this video. If you did, give this video a thumbs up. It helps out the channel a lot. If you have any questions, post a comment down below and subscribe to my channel for a lot more content on day trading. If you don't follow me on Instagram, make sure that you follow me there because I post a lot of good day trading content on Instagram as well. The link will be in the description box below. Thank you for watching, and I will see you guys in the next video.